And so we'd like to do the discussions further. And with me in the studio this afternoon is the financial analyst, Isaac Adongo. You are very welcome to the studios of GBC 24 once again.
Yeah, good afternoon.
Right. And so I read a piece on your Facebook page, and I concluded that, when it comes to IMF and Ghana, you should be an expert. Now, is it a norm that anytime we sign on to an IMF program, we have to review our budget?
No, I think generally when you sign up onto an IMF program, in normal circumstances, you expect that IMF will buy into your program for the year,
right,
and therefore seek to get the needed financial and other technical support that would support you to implement your budget. Unfortunately, at the time when Ghana was going into the negotiations with the IMF, Ghana had pulled out of IMF and was not immediately considered the kind of country that will access IMF assistance. And therefore, Ghana had to put together a budget based on the most prudent scenarios that it could have in the course of the year. But given that several things have changed in the course of the year, this budget review is necessitated not just by the IMF program, but also by the numerous other difficulties that the budget is facing right from the beginning.
Like what?
Like, for instance, we are expecting to lose in the region of $700 million. Last year, we had about $780 million of budget funding from the oil, the petroleum revenue.
Right.
Now, out of those $780 million, only $306 million actually went into the budget in what we call the annual budget funding amount.
The ABF.
In this year, we are expecting $1.2 billion in the budget. And of this $1.2 billion, $731 million, that's a massive jump from last year, is supposed to go into the annual budget funding amount.
Right.
Now, if you're already losing $700 million out of $1.2 billion, it brings your total amount that is available to about $501 million, which is even far less than the entire annual budget funding amount in the budget. So what do? You need to go back to say that my projections are not going to be achieved. I've realized it in good time, and therefore I want to have a new program. And you have to understand that as per the Petroleum Revenue Management Act, the formula for calculating the benchmark price of crude is stated as being 7-year moving averages. And that gave us about $99.3 to the barrel. Today, we have lost over 55% of that price. On account of the low prices on the world market, volumes of production on Jubilee and Salt Pond are also dropping. So you see that your revenues are going up on account of your price reduction, but also on account of your volumes.
Right.
And so once you see that clearly from the first quarter, you don't wait until another further period.
And so this budget review is not necessitated necessarily by the IMF program that we've signed on to.
It has been more reinforced by the IMF program.
Right.
You probably would have said, let's see whether the world price of crude and other products will pick up in the course of the year. And so you would have waited till May or June. But now you have an IMF program that was not originally part of your intervention. You have an IMF program that has also identified certain areas that need to be improved. And therefore, you needed to incorporate that in your review,
right,
given that your shocks are now much more significant.
Right.
It is not only oil. Gold prices have dropped, and we know that most of the mines are basically
But at least gold is picking up a little bit now.
Yes, but they had to shut down for quite some time, take people off their employment in order to manage their cost structure. And so you are already having some months that you've lost in terms of your gold production, and that will hit you badly. Again, we do know that in the first quarter of the year, and probably going into the second quarter, the energy crisis continues to become a major problem.
Right.
What it means is that productivity is low, output is going to be low, and therefore your tax targets are unlikely to be realized.
Okay, so we'll go into what we are expecting in the review tomorrow. Yeah. But are we not right when we fault government for over-projecting when it comes to oil revenue? We saw the signs that certainly oil prices were going to fall on the international commodities markets, and yet we pegged our oil price at $99 a barrel.
I think that is a legislative rigidity.
Right.
I told you that the formula is stated in the Petroleum Revenue Management Act. It says you must use 7-year moving averages to arrive at your benchmark price. You have no decision in that, and you arrive at a price that says 99.3. What do you call it?
Dollars a barrel.
Dollars a barrel. And you have all the projections from the field telling you how much volumes you are going to generate. Of course, your royalties are also dependent on your volumes. Your corporate taxes from the oil sector are dependent from the volumes. your surface rentals are dependent on the volumes. And so these three major factors that impact the revenue that you get from oil are all influenced by the price and volume.
Okay, and so tomorrow, if the finance minister goes to parliament, what are we expecting from the reviewed budget?
What I'm expecting is that those specific expenditures that are influenced by the annual budget funding amount.
Right.
And in this year, Parliament had approved 4 key areas. One of which was roads and infrastructure development. There is also the modernization of agriculture and capacity building. Yeah. Those specific items will have to be scaled down in order to meet the projected low revenue.
Especially capacity building.
There's nothing you can do about that. Of course, we also have the other challenge that with an IMF program, you have to look at some of the policy interventions that have been agreed. And I'm very convinced that in this review budget, we will see a scale up of the implementation of the Ghana National Social Protection Strategy, because that is where the IMF and the World Bank will be looking to cushion the poor and the vulnerable who will be hit by some of the policy decisions such as scrapping subsidies and the rest. And so a scale up in those social protection programs are expected in this budget.
Right.
Again, I expect that some of the things that were stated in the President's State of the Nation address that were not captured in the budget because they had not been discussed with the IMF at the time and therefore had not been included in the budget would definitely feature in this review program.
All right. And so you present a budget in November, and in March you are presenting a new budget. Is it not going to affect businesses in terms of projections?
Well, businesses are going to be definitely affected because even not reviewing it further gives the business community more uncertainty.
Right.
The business community will move into the next quarter much more clearer in their view how government intended to address the shocks that were faced. I think that is a better way to help businesses than to keep them in uncertainty and they are not too sure the posture that government is taking. So this gives businesses a major lift in terms of they understanding clearly government's policy direction and focus towards the rest of the year.
Right.
And I believe that this is a better exercise.
Okay, the cedi is depreciating once again. Are we going to see measures to help, shore up the local currency?
I believe strongly that when the IMF program begins to take a full bite, the cedi will stabilize.
Right. It
will stabilize purely on account of what we discussed the other day, that donor inflows would improve. In the 2015 budget, about 5.5% was what was expected. I expect that to improve significantly to about 20 to 30%. So those amounts of inflows from the EU and other donor partners that were not comfortable, once they start coming in, the cedi will see a stabilization. There is also a program that may be announced in this budget, which is to refinance most of our maturing debt obligations using a much more structured raising of financing. And here the focus would be to replace short-term debts that were used to finance long-term projects with long-term projects.
Right.
But also to seek for opportunities to reduce your cost structure. Now that you have an IMF, now that the international community is confident in you, you can go in there and get a better deal on the capital market.
Right.
And use that to replace the more expensive loan portfolios that you have. And once those inflows come in, and most of these are maturing in 2016, 2017, it would improve our growth, our international returns.
Okay, finally, before I let you go, inflation dropped from 17% to 16.4% in January. That was in December. Most analysts were expecting that it will continue that downward trend. But today, the Ghana Statistical Service reported that inflation went up by 1 percentage point. Yeah. Is it going to affect the economy in any way?
It will depend on what is bringing about the inflation. If it is non-food inflation, then of course it is difficult to curtail immediately unless you use monetary policy to curb that.
Right.
But if it is food inflation that has dropped, then it means that we have some stock that can take us into the lean season, and therefore will begin to cushion us a lot more into the future. And I believe that if you look at even the drop that we have experienced, particularly on account of producer price index, then it tells you that most of the indicators are beginning to strengthen. And with Ghana not expecting to increase utility rates anytime soon, we want to see some stability.
Right. Thank you very much. And so we've been speaking to a financial analyst, Isaac Adongo. He's been talking to us about the budget review, which is supposed to be presented to Parliament tomorrow. Quickly, let's check how the local currency is performing on the interbank market today.